Welcome back to the channel, guys. I just wanted to do a brief sort of IncomeShares Monthly update for October and seeing how where the funds are at. I'm going to do a separate video on the performance of the stocks like I did last time, maybe against Yield Max. I know some people are a little bit critical of me comparing Yield Max funds, but I thought it would make an interesting kind of comparison to the underlying and the Yield Max funds. But so let's look at how IncomeShares are doing and the funds themselves at a high level. So the total AUM is now 87.5 million. So that's an increase of 13.3 million versus September. So ninth consecutive month of growth, which is great to see. Trading turnover is 42.2 million. So that's a 62% increase versus September. So a new record. And what's interesting is 50% of that's coming from the extra exchange. Cumulative fund flows now is 91.6 million, so 30 million in October. So that's the strongest month of new inflows since May. And the top yield analyzing is around about 113%. And that's the Coinbase one. Obviously, Coin is averaging 86.99 year to date. And a lot of this, obviously, take with a pinch of salt because Coin has dropped a lot recently. Hence, the yield has gone up quite substantially for it. And I just want to add that obviously the markets are down at the moment at the time of recording this, and a lot of the underlies are down, and a lot of people are concerned by that. But ultimately, there's very little IncomeShares can do about it, right? It's still the underlying that drives the premiums and the assets. There's very little they can do about that. But what you've got to realize is they are harvesting the income from these still, and we've got to hope as the markets recover, the underlyings recover, the ETP will recover as well. And they've obviously got a lot more flexibility in their strategy now. And they've just released a new version update almost the other week, changing and rolling on Thursday. Let me know in the comments if you want me to do a quick video on the changes they've actually rolled out and why they've potentially rolled it out. Maybe I could do a quick video on that as well. So if we look at the asset flow more in a deep dive, so October 13.3 million AUM increase was driven by strong inflows supported by positive performance until we obviously had this corrections that are going on now. The performance gain is quite good. When we look at the inflows versus diversified across tech, metals, and the crypto-linked ETPs, so the top four inflows for October was the Mag 7 at 1.6 million, gold 1.6 million, coin 1.2, and silver 0.1. No great surprise in terms of the increase in the commodities ones and the metals. The Mag 7, again, I think a lot of people are edging towards baskets now and preferring baskets. And so again, the Mag 7 doesn't surprise me. That's had a fairly good inflow for the month. When we look at cumulative fund flows now, so these are net inflows. So this is obviously showing the fact that if you've got a net inflow, that will suggest a positive growth and interest in your particular ETPs and your particular funds. And we can see that month on month, that's grown from 13.7 in January all the way up to 91.6 in October. The total AUM growth in 2025 has also substantially grown from around about 14 million now to around 87.5 million at the time of recording this. So again, assets under management are growing. From an investor's perspective, this is good to see. It shows interest in their products, but it also shows that the funds are growing and therefore they're likely to hang around because they're eventually going to become profitable for the fund managers to keep them and maintain them and grow the asset pool. So again, it's good to see this kind of growth. What was more interesting from my perspective was the trading activity, which I didn't anticipate. So trading volume hit a record 42.2 million in October with strong contributions from all the exchanges, but we can see the extra euro turnover was substantially bigger than the rest. So if we look at it, turnover has grown gradually over time. The LSE USD turnover has been fairly consistent until October. The LSE one has been a bit all over the place, but has been still pretty solid. But what we've seen is in October, particularly where the extra has really taken over, it's almost half of all the trading volume for that particular one, 21.2 million. whereas it's 12.8 million for the LSE GBP and 8.2 million for the LSE USD. Does that mean there is greater interest in Europe now? And that will be interesting to see whether that maintains itself going forward, because that means it's really starting to take traction in Europe now, whereas I think a lot of the traction was initially held in Europe, in the UK. Okay, so if we look at the kind of annualized distribution yields now, the heat map below kind of shows the monthly, medium, and average annualized yields for all their ETPs. Note, obviously, the high yields from volatile assets like coin and the steady lower volatility income from assets like the gold. And I've ranked these in order. And I've deliberately separated out the average and the median so you can get a good idea of whether it's an outlier or not. Obviously, Coinbase is at the top with 82.8%, Nasdaq 75.2%, Tesla at 69.5%, S&P 56.3%, Strategy 50.8%, Palantir again 57.1%, and then we start to get into sort of the 40s now, with AMD at 42.8, Alibaba at 44.6, Nvidia at 43.9, Broadcom at 40.7. The Mag 7 is at 33.7. So even its average, now it's only been out for a short period of time, but I think if it can maintain the 30s range, I think it could be quite attractive for a lot of investors, especially if it can maintain its NAV at that sort of yield. Obviously, the concentration is quite high, but then so is the concentration for the Nasdaq and for the S&P. Yeah, it'd be interesting to see. Maybe if they could create a basket a little bit more like YMAP, it'd be quite interesting. Or maybe increasing the Mag 7 to include slightly more stocks in it, maybe 10 to 15 in total, just to manage the NAV piece. Okay, Meta around about 20.8%. Alphabet, now we're getting into the 20s. Alphabet around 19%. Amazon around 15.6%. Apple around 4.5%. Silver around 12%. The Treasuries at 12.1%. Microsoft around 6.2%. And gold around 7%. So those are the median numbers. Obviously, some of these have been around longer than others in terms of funds, so they need a bit more time and data. As I said, I will do a separate video on the actual performance against the underlyings and potentially against competitors as well, like I did last time, because I think a lot of people enjoyed that and got value from that video. So again, hopefully this gives you some confidence that at least the ETP is getting traction. The fund managers are unlikely to discontinue these products because they're likely going to be profitable for them, and ultimately gives us another way of gaining income. Obviously, I know a lot of people are concerned right now with the drops, but ultimately some of this is outside of IncomeShares control. But what would be interesting to see is how they manage these drops now they've got the flexibility of all these different strategies. Whereas last time when these drops occurred, they didn't have the flexibility to do the rolls. They didn't have the flexibility to have the ladders in place. There was all these restrictions placed on them, whereas I think now those restrictions are less so. It'll be interesting to see how they manage this turbulent period in the markets. So there you go, guys. Again, nothing shared here was investment advice. Hopefully you found it useful. Thank you to the 100% Club again to getting to the end of this video. Let me know your thoughts, by the way, on the funds themselves, where your confidence lies. I know a lot of people, as I said, are a little bit nervous right now. You've hopefully seen what the new strategy can do. And I think in probably January onwards, we'll probably get a true feel of how the strategy is playing out. Whereas obviously we've had some 5-week months. We've had some shorter months with probably November having Black Friday in there. And then obviously Christmas always being a shorter period, so December. So it'll be interesting. I think early next year we'll get that true visibility. But let me know in the comments, guys, what your thoughts are, and I'll catch you on the next one.